We also see that over here, 162 for 61. We also see 181 for 101. And most importantly, we see a 1 and a 0 at the bottom. So what does this show you? Just by zooming out and not being able to read the numbers, we see a lot of aggressive sellers over here. They fail. We then see price leaving a bullish fair value gap. So we're seeing sellers fail and price is giving us a bullish fair value gap. So let's just go back to the candlestick chart, right? We see here sellers have failed, right? These sellers here have failed, right? Sellers have failed inside of a bullish fair value gap. Notice how we're below the 10 a.m. Eastern. So this is tick, this is tick. Now we're coming into a 5-minute fair value gap, which is also a tick, and we're analyzing the price action in this area. So let's make the charts a little bit clearer, and let's really understand what was going on inside here. So price now, if we just play price on, we see price coming into this area. We want to understand what is going on inside of this wick, right? And this wick was given just over here, right? This wick is so important. So we have a green candle, right? We are expanding upwards with a green candle. But what's really happening is if we dive in, we saw so many aggressive sellers and we see more aggressive sellers over here. The volume has dried out. We see 1 for 0. So the volume here is tiny, which means that sellers have failed and price is no longer interested in trading here because the volume is low. A low volume indicates a lack of interest between both the buyers and the sellers. It's important to understand that. Now, once you have this in place, what you can see is sellers have failed. So buyers are in control, right? Aggressive sellers have been absorbed by the passive buyers, and that is exactly what has happened over here. So now that we see price breaking with the body over here, we can comfortably place a long with a stop loss just below this fair value gap. And now going back to our regular power of 3 concepts, where do we look to target? Well, we simply target the high of the candle over here. That's a 1.5 R trade, but really you want to be targeting a 2 to 2.5 R trade, right? So this trade did have some run rate. We saw price coming in, eventually tagging our entry again before going to the upside. So what I want traders to understand and take away from this video is when you're using the power of 3, the reason you fail at using the power of 3 is because you're not using the power of 3 with all the correct concepts, right? Let's break this down one more time, right? So you want to be buying below the 10 a.m. Eastern. So we're really going to break this down. You want to be buying below the 10 a.m. Eastern, right? So, oh, sorry about that. You want to be buying below the 10 a.m. Eastern. So buying here below the 10 a.m. Eastern, right? You want to be buying off a 15-minute fair value gap below the 10 a.m. Eastern. And it's very important you understand what's going on here. Very important. This here, ladies and gentlemen, is order flow. So if you're not using order flow, this is probably the reason your power of 3 is inconsistent and it's not giving you consistent results. So the question now becomes, why didn't we buy from here, right? Why didn't price come here? Well, you never know for sure where price is going to react. But based off the order flow, what we saw over here is we saw a lack of volume over here. So we know that sellers have failed here and we know the volume has dried up over here. So this shows you that the market isn't interested in lower prices because as the market moved lower,